at some point, unfortunately, the game does end. At some point, corporate profits are not going to continue to escalate the way that they have been recently. At some point, consumers are going to be tapped out. We just can't afford the higher prices anymore. At some point, the trees stop growing to the moon. And unfortunately, we enter a recession, and we may be pretty close to that point right now. Let me share with you some information about why I think we might be pretty close. The first thing I want to share with you is an article from Reuters, and it says that the U.S. consumer spending posted its first drop in almost 2 years. And before we jump into that article, I want to thank this video sponsor, who is Chapter. And Chapter is a Medicare advisor that puts your interests ahead of the insurance companies. More on Chapter later, but thank you, Chapter, for sponsoring this video. Okay, let's jump into this article by Reuters. The summary is consumer spending dropped by 0.2% in January. That may not seem like that much, and it's not, but it's a drop. And a drop is a big change from what we have been seeing. And the other thing is the price index, the PCE price index, increased 2.5% year over year. The core price index rose at 2.6% a year. And the goods trade deficit jumped 25.6% to a record $153 billion, which is why Donald Trump is talking about these tariffs. Now, the consumer slowing is important because the consumer represents 2/3 of the U.S. economy. And when the consumer catches a cold, when the consumer slows down, unfortunately, the entire U.S. economy also catches a cold. Okay, let's jump into this article some more. This is the Reuters article. U.S. consumer spending fell for the first time in nearly 2 years in January, and the goods trade deficit widened to a record high as businesses front-loaded imports to avoid tariffs, setting the economy up for weak growth or even a contraction this quarter. Because when companies are front-loading their purchases, what that means is their purchases are going to go down in the future. They're going to have less demand. Okay, let's jump to the street. Not only is the consumer slowing, but it's this evolving spiral that unfortunately, once it starts, can be hard to get off of. And that spiral is layoffs starting. So according to thestreet.com, the Starbucks CEO has a tough message for employees after layoffs. And the Starbucks CEO is saying here that the article starts off saying that the U.S. operating income of Starbucks profits after expenses decreased 22% year over year. And since the recent decline in sales, Starbucks laid off 1,100 corporate employees worldwide last month and paused hiring for hundreds of open job positions. And then the CEO went on to say this: we're not effective on how things get to the store, and we're not effective in making decisions and then holding each other accountable for those decisions. This is why we had to make the changes that we had to make. I don't know about you, but if I was working for Starbucks, that is not a message I would want to hear. My friends are getting laid off. And oh, by the way, it's you people at the store that aren't making good decisions, that aren't making things happen well enough. So it's a tough message for everybody. And these layoffs are continuing. Many of you have heard about the Southwest Airlines, which in their 53-year history had never done a layoff. And this is according to CBS News Texas. Dallas-based Southwest Airlines announces mass layoffs, cutting 15% of their corporate workforce. And the CEO there, Bob Jordan, had this to say: "This decision is unprecedented in our 53-year history." So the airlines are laying off. Tech companies I'm about to talk about are laying off. And so are we entering the first phases of this spiral? Stick with me and I'll talk about it. But first, I want to talk about Chapter, which helps people make good decisions about their Medicare options. Now, when you first qualify for Medicare, your mailbox, your email, your phone voicemail is going to be flooded with people offering to help you set up Medicare for the first time, and also later help you make decisions on which plans that you use. And what you want is somebody that's putting your interest before the interest of the insurance companies that they represent. And that's why I'm proud to partner with this video sponsor, Chapter, because they pledge to keep the interests of their clients ahead of the interests of the insurance companies. The other thing is they've gone through the really difficult and arduous task of putting together all the data to make sure that when they say, this plan is going to reimburse you this amount for these drugs or, for these procedures, that you're making decisions with good information. The team at Chapter really digs deep, and they have a core expertise in data. They came from a very successful data company, and they're applying that experience and knowledge to Medicare. And so I'm proud to sponsor with them. You can reach Chapter for free here at this phone number. Their services are free to you, or you can use this link over here. Thank you again, Chapter, for sponsoring this video. Okay, let's jump into to these tech layoffs that I promised to talk about. This is according to indmoney.com. Meta, Google, and Salesforce announced major layoffs in 2025. They check the market impact and the cost, and they talk about information from layoffs.fyi. You can see here that almost 22,700 tech employees have been laid off. It's 81 tech companies with layoffs in 2025. And importantly, from a government job standpoint, almost 33,000 government employees have been laid off by DOGE, and there's been 110,210 departures, federal government employee departures in 2025 as well. I found this chart really interesting that shows the layoffs by department. You can pause the video and take a look at it. But what does it mean for you and I? I said at the open that unfortunately trees don't grow to the moon. And we've had a really good run in the economy. We've had a really strong run in the stock market. And what's important for all of us is to have a strategy, to have a long-term strategy that we can stick with in good times and bad. And I don't know if bad times are coming. It seems like, and President Trump in his latest State of the Union address said, prepare for some difficult times. And I think that's wise advice. This is not a political channel, but I think the time to prepare for difficult times is when we're thinking calmly, when we're thinking rationally, when we have not been told we're going to get laid off, when our 401k and brokerage accounts are at or near all-time highs. And we can look and say, is this really my right long-term asset allocation? And if it is, great. But if it's not, it's easier to make that decision. For many of us, our stock allocation may have drifted away from our long-term asset allocation. Because the stock market's done well, it may have increased. And so the time to bring that back to your long-term allocation is now. None of this is financial advice. I don't know your situation, but I do know we all want to make good decisions. And regarding that, the YouTube algorithm says this is the next video of mine that you should consider watching to continue making good decisions. Thanks for watching this video. Bye-bye.